We've been in a really strong bull market here for the last year and a half or so. 2023 was a very strong bull market, and so far 2024 has just followed suit. And when you're in a strong bull market, you start seeing a lot of people that trade, especially newer traders that are just getting into the game. They're having success. They're having success because the market tends to go up. They're typically playing it from the long side themselves. If they're a newer trader, most new traders tend to play everything to the long side. And because they're making all of this money, they really think trading is easy. It's going to be this easy for the foreseeable future. They're always going to make these crazy 30%, 40%, 50% annual returns. Then they ask the question, hey, this is so easy. Should I just quit my job and start trading full time? So let me be very straightforward with this answer. Absolutely not. You should definitely not quit your job and start trading full time just because you have made a little money in the last year or 2 years, all right? That's not enough time. I did a video recently about the law of large numbers, that you need to make thousands of trades before you really kind of know what you're doing, before you can objectively analyze your track record and say, hey, I've got this trading thing down. You haven't traded enough if you've only been trading a year or two. Really, I would say you need to trade at least a minimum of 5 years. You need at least a 5-year track record that you can go back and analyze and look at, and you've had this 5-year run of being successful as a trader. If you've done that, then maybe thinking about quitting your job and focusing solely on trading as your full-time job, if you will. Maybe if that's the case. But if you haven't been trading in a serious way for at least 5 years and been successful over that 5-year period, absolutely not. Do not quit your job. The problem with these bull market geniuses that think they are better at trading than what they really are is they're bull market geniuses, right? They haven't seen a bear market. If you weren't trading back in 2022, which was only 2 years ago, right? We had pretty much a year-long bear market where on January 1st of 2022, and the very first trading day of 2022, which I think was the 3rd of January, that was the high point of the year. Every day for the entire year of 2022, essentially, the market went down. Now, it was pretty much an 11-month bear market where we started in January and really went down all the way until like November. And then at November, things started turning around. Once we got into 2023, then that raging bull market really started with all the AI hype and all of that stuff. But, if you didn't go through a year like 2022, how the hell do you know how you're going to handle a bear market in the future? Because chances are, if you've been making a lot of money in 2023 and 2024, you've been trading bullish strategies, right? How are those bullish strategies going to handle a bear market, right? Have you tested it out? Have you actually have any real world experience with that yet? No, you don't. And if you don't, trust me, you're going to be in for a shock when that next bear market hits. Also, how are you as far as risk, especially directional risk, as far as your overall risk to the market? What would happen to your portfolio if the market crashed tomorrow? You haven't experienced a market crash if you've only been trading a year or two. You didn't go through the COVID crash back in 2020. That was interesting. The S&P 500 in one day lost 12% of its value on that first day during the COVID crash. A week later, when it finally made the low for that crash, overall, I think the S&P 500 was down 34%. In that crash, over that week-long crash, it went down 34%. How would your portfolio handle a 34% drawdown in the overall market? And of course, these events I've been talking about just happened here in the last 4 years or so ago. What happens if you go back 15, 16 years? What if you were trading during the financial crisis of 2007, 2008, 2009? That was a lengthy bear market too. And that was a real struggle to get through, especially if you're one of these bull market geniuses, right? All you ever do is put on all these bullish trades. I wonder how you would have done in 2008. Let me just go ahead and give you the answer to that. Not very well. Going back even further, you had the dot-com burst of 2000, 2001, 2002, where you had 3 straight down years for the S&P 500, right? How would you have done in a 3-year long bear market? All right. Again, everyone's a genius in a bull market. Everyone makes money in a strong bull market. It's almost impossible to lose money in a strong bull market because at the end of the day, you just put on a bunch of bullish positions as options traders. If all you're ever doing is selling a whole bunch of short puts or selling a whole bunch of put credit spreads, whatever bullish strategy you're doing, even just buying long calls if you like long options, right? All of that just makes a ton of money when all the market does is just go up, right? But as soon as the market, gets a little rough, it gets a little choppy, such as in a recession or a bear market, where all of a sudden the market no longer just goes up and up and up. There's a lot of really big swings, a lot of two-way action in the market. How does all your bullish positions do in that? Or what happens in a crash when the market just all of a sudden drops 20% in a week? How's that bullish position working out for you? And I say that as somebody that mostly puts on bullish trades myself, right? I'm mostly playing from the long side, and somebody that went through 2022. I mentioned 2022 was pretty much a year-long bear market. And for 2022, my trading, I was down on the year. I played mostly bullish strategies like I always do. And I finished the year down, I think about 7 or 8% on the year. Now, overall, I think that was a pretty good year for me because the S&P 500 actually was down 20% on the year in 2022, right? It was a horrible year for the overall market. And, even though I lost money that year, I didn't lose as much money had I just been holding shares of SPY, for example, right? I still beat all of you guys that were passive investors that were just holding an index fund or whatever you're sinking your money into. So even though I didn't make money by actively trading, I still didn't lose as much money as most people that year, but still, I lost money. But I wasn't trading for a full-time job. You would be. How would you do if for an entire year you didn't make a cent, right? In fact, you lost money. How would you do? Because you're depending on your trading now, if it's a full-time job, to pay the bills, to pay the rent. Used to you had a job and a steady paycheck to fall back on to pay those bills, but now you don't have that anymore. How's that going to affect your mental state? How's that going to affect your trading? Because don't be surprised when you have a lot more at stake. You have a lot more on the line if you're trading for actual income. And don't be surprised if your trading changes drastically because mentally you're just not in the same place as you were when you had that job. So ultimately, I think you got to trade for a few years before this is something to even consider, because if you're primarily a long delta trader, meaning you're a bullish trader, you have to see some bear market years, right? You have to see some bear market years and you have to see some crashes. Otherwise, you don't know how you're going to respond to those just yet, right? Now, if you're primarily a short delta trader, so short delta, you're typically bearish, or a delta neutral trader, so you're usually not either bearish or bullish, right? You're kind of playing the market to not move very much. Now, if you're one of those kinds of traders and you've consistently made money in a bull market, well, that's impressive. That's really impressive. But if you're a primarily bullish trader making money in a bullish market, well, yeah, I mean, what did you expect? Heck, in 2023, I was primarily trading the wheel strategy and other similar bullish strategies. And I think I finished the year up like 60%, 65%. But, like the NASDAQ, which I was mostly playing tech stocks, the NASDAQ, which is mostly the big tech stocks, that particular index finished the year up like 45%, nearly 50%, I think. So, if the NASDAQ finished up nearly 50% and I finished the year up, 60%, 65%, somewhere in that range, yeah, I did well, but I didn't do that well, right? Because, the overall market was also doing really well. So that doesn't make me a genius, right? I'm just riding the wave. But what you have to understand, if you've only been trading the last couple of years, these returns are not normal. Having a 30% return or a 40% return or a 50% return in a year is really something rare, right? You're not going to get too many years like that. And you're certainly not going to expect those kinds of years to happen every single year. That's not going to happen. Much more likely is you're going to average about 10 to 15% returns annually if you're a winning trader. If you're a losing trader, you're not even going to get that. So that's another thing to consider. If you're thinking about becoming a full-time trader, make sure that the actual numbers that you're basing your decision on, make sure they're realistic numbers. I've seen some people online, have these ridiculous annual returns, very short-term returns where they've only traded for a year or two, but in that year or two they've traded, they saw 100% returns or more, 150% returns in a year. And they think they are just the best trader ever. They are God's gift to trading because they made this outrageous return. So they're ready to go full time and really show everybody how it's done. And they don't realize how bad of a trader they must be to actually make a return like that. If you ever have a year where you return 100%, 150%, 200% returns, you are not a good trader. In fact, you're probably a really horrible trader, and you're lucky to even have any money in your account right now, because what that tells me is you have absolutely no risk management skills at all. You are taking way too much risk, and you were very fortunate not to take a bad beat during that year, because eventually it's going to catch up with you. If you're making those kinds of returns, you really need to ratchet it down a little bit. You need to scale down your trading, because you still have a lot to learn. On top of that, a lot of these people that are asking this question about becoming a full-time trader, should they become a full-time trader, don't have enough money to actually make that a possibility. It's not feasible to become a full-time trader if you only have $100,000 in your account, or $200,000, or what, $500,000 even, right? If you don't have a minimum of at least $1 million in your trading account, and I say a minimum, I actually recommend 2 million or more. I mean, what are you expecting on average for a return for the market? You expect about 8 to 9%. Hopefully you do a little better than that, but who's to say you will? Also, who's to say you won't run into that occasional year-long bear market, right? How are you going to do in a year where you don't get any returns at all and you actually lose a little money of your net lick value? Well, you better have a big enough account value to where you can still withdraw money from your account and still be okay trading the following year. So again, unless you have at least $1 million, 2 million would be better. Why? This is not even a question you should consider. And one final thing I'd like to point out is that, quitting a job to trade is not necessary if you have the right trading strategy. If you're primarily an options trader, especially somebody that primarily sells options, somebody that does a strategy like the wheel strategy, for example, I don't need all day to trade. I don't need to put in 40 hours a week trading. For one thing, I would hate to do that. Trading should be something that actually gives you a lot more free time to do the things in life you want to do. Trading should never become something that you're chained to as a full-time job, right? That's not what trading's about. You know how much time I spend on average on a trading day, actually monitoring my trades, putting on new trades, whatever it happens to be. I spend about 30 minutes a day on a trading day, trading about 30 minutes a day, right? So in the total week, if it's a 5-day trading week, I spend 2.5 hours, maybe 3 hours a week trading. 3 hours, not 40 hours. 3 hours, right? If you have a 40-hour-a-week job, a full-time job, you don't have to quit that thing so you can trade. You have all the time in the world to trade, right? Because it doesn't take that much time. So trade, hold your full-time job as well, and take that money, that steady income from your job. If you want to, put that thing into your trading account. Invest some of that money, grow your trading account. That way, when you're really prepared to make that jump, should you choose to do so, you're in a much better place than you are now. Peace, guys.